Three stocks trading around 52-week lows. Let's analyze them and I'll give you the best entry prices for each stock. Hello fellow investors, first stock is TSN. This is the last time I'm screening this stock on this channel, so if you want to be updated on this one, along with many other stocks, go join our Patreon for more exclusive contents. This is TSN valuation summary. The stock is still expensive, trading at 1.88 times their margins. This is a low margin stock ranging from 4 to 6%, so you might want to buy this stock cheap. If you're new to the channel, one of my approaches to stocks is that I pay 1 PE for 1% of their margins. My preferred PE is 4 for this stock. You can use 6. It depends on your risk and return requirements. I always use the lowest band of their margins as my PE to accommodate for my margin of safety, and so I can position myself for a higher return. I then simply multiply this PE to their EPS and I get a fair value. In this case, it's around $34. Guru Focus's intrinsic value is $105. Don't get too bulled up on this. It's not always accurate. The stock is now down 37% of the highs, gives out $1.92 in annual dividends. I do think they're safe, but their current debt level is high right now thanks to their low cash and low free cash flow 3 and 12 months positions. I don't own the stock. I don't think you should pay premium for a single-digit revenue growth. Although overvalued, I wouldn't recommend selling. I'd hold for the dividends. I think it's a stable company going forward, but I also wouldn't recommend adding to your existing positions here just yet. Here are the snaps of every metric for your review. Let's look more into this stock. This is TSN's charts for the last 5 quarters plus 2 quarters of forecasts. If you join our Patreon, you get exclusive contents like this. I'll tell you how to maximize this data and ultimately, it should help you trade these markets. Anyway, this is their fundamentals relative to the highs and lows of the quarter. The PE, price to free cash flow, and PBs. This is already adjusted with their diluted shares reported quarterly. Let's first identify why the stock is falling. Revenue and equity are increasing nicely, but the free cash flow is decreasing. Also, analysts forecast 2 quarters of profitability decline. This is probably based on their outlook or guidance, I don't know, or maybe as a result of the whole Fed tightening thing. But yeah, this is probably why the stock is falling. My fair value right now for this quarter is around $35. Again, with 4 PE, that's why I included that in the forecast. Their margins have to stay above 4%. I don't see it going below $50 this quarter, to be honest. I don't know. I mean, it could happen. The markets could be crazy at times, but I'm sure there'll be deep buyers of this stock around this dividend yield levels, especially those who are looking to hold this stock for long term. So yeah, I'd buy this stock any price below $35 this quarter, or I'll just wait for their fundamentals to catch up with the stock price. Oh, by the way, you can buy this stock on their equity basis. The stock is cheap equity-wise. 1 PB is around $55. You might want to start deep buying there for a trade, but yeah, prefer $35. The cheaper, the better. Next stock is NWL. I screened this before at $19.51. I called the $9 on this stock. I even put it on the thumbnail, so no escaping from that. This is NWL's valuation summary. A lot of reds here. Not so different from the previous one. The reds mean red flags. High multiple, expensive. This is a low margin stock as well. You should pay cheap for this. This is a 4 to 8% margin stock. Again, I prefer using 4 as PE. You can use as high as 8, but that limits your margin of safety and your potential return on the stock. Here are the snaps of the metrics for your review. Here is NWL's charts. It's the same problem with TSN. Their free cash flow is going under. But unlike TSN, their revenues are decreasing and their equity is decreasing as well. This might be a dying company. Careful investing on this one or putting money too early. Analysts are forecasting 2 quarters of profitability decline. But if their margins stay above 4%, this would be my fair values here, around $4 to $5. My fair value for this quarter is around $5. This is if I use 4 PE. Again, fair value is a range of prices, not really a specific price. So that could change, depends on how you look at stocks. And that's why I try to be consistent with my process to avoid confusion. I always use the lowest band of their margins as my fair value. So yeah, I'm seeing more downside to the stock, but they had 3 quarters of negative cash flow already. Maybe investors would get excited when they report a positive cash flow next earnings. I don't know how to handle this stock here at this price. I wouldn't buy here just yet. I wouldn't short either. I'd put an alarm at $11, the COVID lows. If we break that lows, we could flash back down to our preferred price targets. Next and last stock is HBI, Hanesbrands. This is HBI valuation summary. Coincidentally, it's also a low margin stock, 48%. Again, I prefer using 4P as my fair value for this stock. Multiply that by their EPS for 12 months and you get a fair value. It's still a little rich in multiples for my liking anyway, but I'd put this on my watch list definitely. If you think HBI could still be profitable in the next years to come, well, now is the time to be interested. They have EPS growth, they buy back shares, and I'd like to think the dividends are safe with them. Here are the snaps of the metrics for your review. This is HBI's charts, 4 quarters of declining free cash flow. That's easily why the stock is down. Analysts forecast 2 quarters of declining profitability. But as you can see from my previous fair value, the stock should be getting some attention by now. I'm not saying you buy blindly. I'm saying it could still get cheaper. Again, look at the overall markets. It's yet to really roll over. This quarter, I'm looking anything below $4. Maybe we'll get that 15% dividend yield. I'm not really itching to buy and own this stock, so if I get my target price, good. If not, then I'd rather have other stocks. Be picky, be choosy, be strict with your process. Just because it's fallen 50% doesn't mean it's cheap. I think this will make new lows just by looking at this data here. Previous quarter's lows, the multiples are cheaper. That means buyers are paying for more this quarter with the fundamentals weaker than the previous quarter. That's it guys, let me just summarize my price targets. TSN $35, Newell $5, and HBI $4. Again, these are fair values. I don't recommend buying at fair values. You want to buy them below the price targets, or if you're okay buying at fair values, then have at it. Just DCA all the way down. Don't forget to subscribe guys. Check out our Patreon for more exclusive contents. See you next video.